Good morning. Data says, what do you expect from the Fed? They already told us. They told us 6 months ago. That's good enough for me. Good morning, everybody. It is a Monday, the 26th of April, 2021. This is your daily Forex trading briefing. Welcome to Forex.today, the YouTube community of 18,000 foreign exchange traders stationed around the world. It's time to align our watches, synchronize our satellites. Whatever. We're here not just for fun and games, technical or fundamental analysis, but for trade planning. Let's go. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble. Focus on the long term and never risk money you cannot afford to lose. Guten Morgen. How are you doing? Hope you had a wonderful weekend. I hope you were able to review all the trades that you did last week and identify strengths and weaknesses. Did you like your trades? Did you like your entries? Could they have been better? Why could they have been better? Did you like your exits? Were they good? Could they have been better? Did you identify 2 or 3 things that you thought you were quite strong on in doing? And then have you identified 1 or 2 things that you could improve on? Do you have a plan for this week to improve as a currency trader, or are you just sitting down and looking for trades? Hey, what's going on, fellas? We got a trade on? I guess we're bullish today. I mean, are you working on something specific? Or are you just here to play? Remember, this is Forex, not Fortnite. So anyways, hey, my name is Wayne McDonald. I'm a currency trader. Been doing this for about 20 years. Did about 10 years of the venture capital, high-tech entrepreneur stuff. Spent 2 or 3 years in the nonprofit world. That's pretty much it. That's me. So feel free to ask questions. I will do my best to see your question in the chat and then address it, but it may take you 10 seconds to type in the question. I might be answering a question before you, and it takes me 10 minutes to answer. Meanwhile, other questions have been asked, and I might not get to yours. I might not even see it. And for that, I apologize, but that's why I've been on YouTube every single trading day for about, 14 years is how old YouTube is? Yep. So anyway, I will do my best. If not today, then maybe tomorrow, yo. So, hey, focus on the long term. You don't want to get rich quick. What you want to do is try to have steady returns with low volatility in your portfolio. So we'll try to address some of those if that's what you want to. We'll go through the calendar today because this particular week we have lots of news. It's a wonderful trading week, so I'm looking forward to it. Super happy. And then other than that, I don't know. That'll probably take up a couple of hours. So, yeah. What else? Hey, if you need a trading account, why don't you consider TradersWay.com? They've earned my loyalty and respect over the years and years and years. When I first started getting involved with them, boom, we got hit by the Swiss National Bank debacle. I don't know what else to call it. It's what put FXCM out of business in the United States. It put Alpari out globally, hurt a lot of brokers. And yet Traders Way was absolutely, totally fine by the situation. And so what did that mean to me personally? Well, it meant, was proof in my eyes that they actually execute your trades into the interbanking system. Sounds simple enough, but other brokers may have been trading against their clients and were not actually entering those trades in the interbanking system. And then when the Swiss National Bank lied to everybody and then pulled the carpet underneath the floor that they had set, people's trades tumbled like Alice in Wonderland, or Alice in Wonderland, falling down the rabbit hole, except there was nothing on the other end of that rabbit hole. So, wowzer. So anyway, so Trader's Way was absolutely fine. I did have an open trade, I think, at FXCM with a stop, and I think he had lost an amazing amount for how little the trade was. So, wow, holy smokes. So that's one major reason Trader's Way has earned my loyalty and respect. Seems to me they actually execute your trades into the interbanking system, so that's pretty cool. But fast execution speed, narrow spreads, wide swaps, that's typically what people are looking for. But on the even bigger picture, wowzer. Maybe that's the kind of partner you want for your trading business. Anyways, let's go through the world. Let's go through the world, shall we? Let's start with Lard. Well, this hasn't updated for a while. 550 pips locked in. That's interesting. That's back in February. Let's do an update. 1,300 right now. Whoop, 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 whoop. Now you might say, well, Wayne, on Thursday, that was 800 pips. Yeah, well, now it's 1,300, so 500 pips since Thursday. Cool. Cool. Nice. Great. All right, so let's go through the calendar. Let's go through the calendar. Bank of Japan interest rate decision. Again, when you look at these things, like, we have a pretty good idea that interest rates are not going to change, but you might want to look at the monetary policy statement and their outlook. And what you're looking at is their interpretation of global macroeconomic data. And you want to kind of look at how do they feel about current exports out of Japan and future demand for Japanese exports, and so on and so forth. Okay. So that's what you really should be doing. So you'd put that on your to-do list. Okay. You want to read this. Okay. I don't really care about durable goods and all that kind of stuff. It's too much volatility in the numbers. I never really cared about it that much. Okay, but so the BOJ is going to be the big one for today, which is tonight. Okay. I don't know if you want to watch the Japanese press conference. Do you speak Japanese? Okay, cool. Australian news tomorrow, fine, which is kind of, right? Tuesday, early morning. Very good. Fine. CPI, inflation. Okay, fine. This kind of just is already icing on the cake. What we want to pay attention to is their future outlook for Australian exports. So this is just to kind of indicate whether we're moving in the positive direction or not. Obviously, you want a slightly better number, and they're depicting here slightly less good number. So it'd be great if we can get over 1%, even though the expectation is only 0.7. Okay. Canadian retail sales. Well, we want to see if consumption, remember this is part of GDP, so this is part of the C in the formula, consumption. So, hey, good numbers are better than negative numbers. And right now, negative numbers across the board. Really? Then there's this whole Fed thing on Wednesday. I don't know if you care about this. There's going to be a monetary policy statement, interest rate decision, and a press conference. Theta right at the beginning said, hey, what should we expect from this? Well, first of all, we know they're not going to adjust interest rates. They already told us this. They told us actually last year. Okay? And that had to do with the gap between current GDP and potential GDP and something that he called an overshoot. So then he even, I believe, put a year on it, which was 3 years. So like they're not, what they've told us is they're not going to adjust this for 2 more years, if even then. So really what I'm looking for is forward guidance. But here's what I've told you guys quite a bit over the years. The April Fed meeting to me is somewhat dead. It's the June that I'm interested in. So if I, looking at the policy statements and watching the press conference, I'm really thinking about what are they telling us in these statements about June, okay? And really, if not June, more like September, October. So that's how forward I'm looking. So do I actually care about this meeting? No. Is it important? Yes, but basically, I'm thinking end of the year. For example, is the economy such that U.S. retailers will start buying inventories for Christmas? And if so, more than last year, more than normal, right? How about at more than last year, or how about at normal levels, let's say at 2019, 2018 levels, or even higher than that? Okay, that's kind of what I'm thinking. Are these retailers ordering Christmas products? And if so, then we're going to see in countries that make these products, their factory capacity and utilization statistics should be going up. And you'll say, well, why is that? Well, they'll have new orders for Christmas, okay? So that's what we're looking at. And by the way, we know most Americans have actually saved their stimulus checks. So they either spend it in the summer, because, consumers are sort of only talking 1 month ahead, right? So consumers either going to spend their money on Bart Simpson t-shirts or margaritas this summer, or fold-up beach chairs. Or they're going to spend their money at Christmas time, right? So Jenny and Timmy will have Christmas presents under the Christmas tree. Thank you to Trump and Biden. German unemployment, yep, well, that's a doozy. Okay. U.S. GDP, yep, that's a doozy. Japanese inflation, great. So Thursday is just all day news, okay? Plus, we'll still be trading sort of post-Fed, post-FOMC stuff. But like I said, that should be right on plan anyways, so that shouldn't be too much. But if we get what we need, there will be a lot of grease on the skids. Not a lot of resistance to doing what we want to be doing. Okay, then Germany gets to do their GDP. Eurozone gets to do their GDP. Okay, and U.S. PCE. Okay, now PCE is also huge. Okay, and Canadian GDP. Like, dude, so like this week, starting tonight, is almost like a relentless news week. So Bank of Japan tonight, right? Australia later in the night or early in the morning, right? Canadian retail sales and FOMC on Wednesday. German unemployment, Eurozone, right? Employment, U.S. GDP, CPI out of Japan, German GDP, European GDP, US PCE, Canadian GDP. Oh my God. Oh my God. That is a massive week. How often do I update my bias on each currency? Once every 5 to 8 years. Okay. Remember, I don't use news. I use essentially monetary policy to make my bias. So it's not me making the bias or changing my bias. It's the central bank changing their policy. And they don't typically do that very often. So it's either risk on or risk off. It's either expansion or contraction. It's not like somewhere in between. Now, the good news to that, Rari, is it's not that complicated. Okay? Cool. All right, so let's take a look around the world here. U.S. dollar has been generally weak overnight. Has picked up some strength more recently, just sort of at the open here. Japanese yen is weak, and Swiss franc is weak. So right now, this currency, and this currency put together signifies general risk-on sentiment. Okay. The next one, based on sentiment, you would expect everything else to be up, in particular exporting countries and maybe even specifically commodity countries. So let's take a look. New Zealand, commodity exporter, way up. Canada, commodity exporter, way up. Aussie, commodity exporter, way up. Euro, meh. Pound, meh. Okay. Cool. Cool. Nice. So, why the snow? Let's go here. Okay. Now, crude is not actually heading up right now. It's actually a little more down than up. You can see, statistically speaking, the mean is less than zero, right? The slope is less than zero. So it is technically bearish right now. And you might say, well, look at this. It's been up since November, like straight up like a rocket ship. And then we hit this sort of March area, and it's already kind of pausing. And once again, this is part of seasonality. And I've asked you to look at the EIA, IEA, OPEC websites. And we do have an OPEC meeting coming up, don't we? It wasn't on that calendar, but I believe we have an OPEC Plus coming up. But this has to do with oil inventories and the seasonality of oil inventory. So even 3 weeks ago, I asked you to look at the supply side of the equation. How much oil do we typically have right now? What's the 5-year, let's say, standard deviation from the mean of the oil inventories for this year? Where are we compared to the 5-year standard deviation of the mean? And then where does it tend to change? And you can see all this. All this information is given to you on a weekly basis by various government websites. All you have to do is do your job, find it, and now you can be a successful trader. With that being said, almost nobody here is going to listen to me. That's the frustrating part of my job. I'm like, dude, you could just specialize, trade WTI or Brent or both, nat gas if you want. You can throw in Noki, you could do CAD, you can put this whole thing into an energy complex, okay? And all you have to do is follow about 3, maybe, right? Certainly 3 websites, but then I would throw in, you could do some World Bank stuff. You could throw in, what does Exxon think about future demand? What does British Petroleum think about future demand? What does Royal Dutch Shell think about future demand? And you take all those websites and you put them together. So now you're talking about maybe 5 websites in the entire world. All you have to do is maybe every 2 or 3 months read some of it, make a decision, and you could be a professional WTI or energy complex trader. You could just do it, and you could probably be successful. Now, here's the thing. Just like most self-help books, there's some person that's found success in their life. They tell you their story, and then here's what they say. You can do whatever you want. You just have to do it. You just have to do it. You can do it. I know you can do it. You just need to do it. Right? So here's something like you could just do it. It's 5 websites. You could specialize. You can become an expert at this, and you could profitably trade oil. And looking at what's happening now makes total sense. So either do it or don't do it. And guess what? Successful people generally do it. Right? Hey, I'm not talking down on you. It's a bitch slap. Come on, wake up. Let's go. Success is waiting. Your destiny's there. Okay? And by the way, I was listening to the news today, and they told me why. They said, oh, oil's coming down because of the spike in COVID in India. And I almost threw up in the middle of my meditation. I'm in the shower. I meditate in the shower. So there I am in the shower, and I have Bloomberg in the background, and I'm going and then they're like, "Oh, oil's coming down because of COVID in India." I'm like, blah! What kind of nonsense is that? Gee whiz! And people probably believe it. Garbage, gobbly-goo nonsense. Just do your job. Like I said, today, last week, the week before, all of this is inside of normality. And it's not COVID in India. Anyways, so if you're going to do WTI, you might as well do Brent. This is European oil. Great, fine. And I've been showing you how this lines up with Noki. So now you could be trading Noki. And you're like, oh my God, it looks very similar. I know, right? So this could be your thing. Okay? Today's day trade says sell it at 8.3. Hey, we're just below 8.3. Oh, we hit 8.3 and it dropped. I know, right? So today's day trade's already in. You're thinking about moving your stop pretty soon. You're already done. Cool. Right? So you could be trading Noki. You could be trading CAD. Here's some CAD. Sunday afternoon into my second Sapporo. No, it's not Sapporo. It is Sapporo. Yeah. Into my second Sapporo, I open up my phone and I'm like, oh, it's not perfect, but sell. Done. Stop's already at break even. Got my trade on. Okay, that's how you swing trade. You got to be in it to win it. Okay, so you could be trading this Noki, you could be trading this CAD, you could be trading Brent, you could be trading WTI. If you want, you could be doing some nat gas. And here's the interesting thing. You have to follow 5. You don't even have to do all 5. You could be successful and probably not even do all 5. You can say, well, Wayne, I don't have to pay attention to Royal Dutch Shell and British Petroleum. Well, dude, if you're trading Brent, you probably should, but you don't actually have to. And if you're doing EIA, do you have to do IEA? No, probably not. All right, so now you're down to maybe, hey, track some OPEC and track some EIA. Now we're down to 2 websites because you're going to get different opinions from these institutions. They're not necessarily the same institution with the same point of view. They're from different parts of the world, different cultures, and different types of oil and different customers. So now you're down to 2 websites, and you can specialize. Okay? And everyone that's gone through my macroeconomics course knows that specialization leads to more. You can take all of your inputs, human capital and physical capital, put them together, and you get one output, the maximum potential that combination can provide on its own, right? All the machinery and all the employees, they work at maximum capacity and you will get an output. Well, specialization and trade or specialization and entrepreneurialism will increase your output even though your inputs haven't changed. So the fact that you specialize will give you a higher output. Specialize. Cool. Anyways, going back to gold, you'll notice that we hit our target, right? We're right into there. So we got our whole April done perfectly. Good job. Okay, M3 to the maximum projected target right here. That is our maximum projected target. Okay, that is the highest high you could possibly expect for the month of April. And right, and here is the, it should be here actually. There is your expected entry. Okay. And again, we talked about it all the way down. I've talked about it 10 times, so I don't need to do it again. But this predicts, up, and then this predicts, this is the conservative target, that's the aggressive target. Beautiful. So not only did the entry push up, but then the target pushed down, and that's what one would expect. So here's what you need to do. You need to adjust and look for the next trade. And right now we're looking about 1750. For a target of 1850. Okay? Which would be the same that we did in April, just the next leg up. So the fact that we have red candles right now on gold is good if you're a bull. If you're a bear, you're doing a counter trend trade, and it's not a great trade. Counter trend trades are not great trades. It's twice the risk for half the reward, but you're making money. But really, a bull should be thinking about role reversals, Fibonacci retracements, pivot points, and such. And so, this is what I think many bulls would be thinking. Do we know how many bulls there are? No. Now, here's a little trick. You can reverse engineer this. See how May's projected high is 1850, but it's also a 3A2 Fibonacci retracement? What pivot would predict that? Actually, it's this one. Not pivot, but what fib level? This fib level of 50% actually very often does the 3A2. The 50% is also the M2, which is the conservative entry on pivot points. Oh. So that's probably the number. Now, if we do come all the way down to 1750, 1740, then that's actually going to pull May's central pivot down, and we'll probably be right around there anyways. So the monthly pivots are going to move. So if I can get my drawing tool, I guess I should fire that up. The current May central pivot is there around 1760. What I'm saying is the next one, if this heads all the way down to 1740, the central pivot's probably going to be about here. And then the M3 is going to be further down, right? So it would be probably about here. It's still a sweet spot, right? But that's reverse engineering based on the target here. Okay. Cool. Nonetheless, if you're a bull, you're setting up a buy. Right? You got to have that together, right? Theta says, so once they start to taper, would that change the USD weakness bias? Well, why don't you think about what would happen? Okay. Oh, thank you, Richard. Think about what happened. Just think about it. Just try to think about it. If prices start falling in the bond market, what would happen to the dollar? Okay. Just have to think about it. Okay. You'll have to think about it. Because that's what's likely to happen, right? If the Fed is no longer doing quantitative easing, they're no longer buying bonds. If they're no longer buying bonds, interest rates will go up. So what will happen? And be careful with the answer, because you might say the easy thing. I want you to think about the behavioral finance, not what a textbook tells you. I want you to think about the behavioral finance of it. Okay? So, yeah. And you're like, I don't know anything about behavioral finance. Well, now you know you probably should. There's a thing called Google, which has all the information in the world. Get going. Cool. All right. So we have our energy. We have our biddy. We have a little bounce of biddy. Biddy, 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 can't you see? So, yeah, biddy went from 47 to 54, I think. And now is well, anyways, do what you got to do. This isn't a complete chart because there's no trading over the weekend on through this platform. But you can think about it. You can think about it. You'd probably want to recalculate some of these pivots, or change the bias, or change the time frame. So we can go to here. So white as snow, I say, hey, ho, hey, my love. All right, let's see if this is helpful. See, it doesn't incorporate this drop, I think. But anyways, based on standard analysis, right, 49 would be an entry. And based on that, the ultimate target is between 59 and $62,146. So 62.50, if that's your thing. I guess we got to get rid of this beautiful analysis. Okay, this was the one at buy at 50,000 and take it to 65. The entry was perfect and the exit was perfect. In fact, we hit the target and the market collapsed, which is just awesome, because that means you are not alone. Right? Cool. Okay? Which means now you know you can accurately predict, right? You can accurately predict what other traders are planning. Okay? Now, I would caution you, if this was Forex, okay? Because Bitcoin might not be like a normal currency pair. This could be more like the stock market, where most people make money on the way up and very few people make money on the way down. Downward momentum comes from profit taking, but not real selling. Same thing in the stock market. Almost everybody, right? How about this way? Almost nobody in the market makes money by short selling. Some do, of course, but most do not. Most money is just retirement accounts and mutual funds and all that kind of stuff. So probably 98% of all market participants make money on the way up. And Bitcoin might be the same way. And like I said, so when it collapses, it's not people selling, it's people taking profit. I don't know if that's true, but it could be. Okay? In that case, you would trade this differently than Forex, because there is no up and there is no down in Forex, right? Both currencies can be weak and have the currency pair go up, because one inevitably is not as weak as the other. Okay? So anyways, with that being said, if it was Forex, I'd be extremely worried about a lower high here. I call it fib wars. Okay? In fact, probably David Pegler came up with that. So I'd be extremely worried about the space between the 382 and the 618. Let's do it this way. Okay. I'd be extremely worried about that if it was Forex. Now, if I knew like nobody was really selling, okay? If I thought no one was actually selling, that there were no actual real sellers, then I'd be bent on more up than down, no matter what the technicals would tell me. But that may or may not be true, so you'll have to decide for yourself based on what your bias is. Okay, so if you were just long only always for any reason, then you'd say, okay, we found a floor around 47, which is kicking off of here. Okay, let's just kind of connect these I'll do it this way, just right. So if you found this to be a floor, then how would you raise this? Well, you probably go up into the moving averages, get rejected, up into the resistance and get rejected, and then up to a top, rejected, and then hopefully a breakout. If this was a true market of buyers and sellers, then I would expect something more like this. Okay. Cave says that beekeeper. I don't know if he keeps bees anymore. Okay. Daniel says, where is the 6 trillion coming from? If there's only 71 billion a month in deficits and stuff. Global business is priced in dollars. That's because of the reserve currency. So it's not just the United States doing business with the rest of the world. It's the rest of the world doing business with the rest of the world outside of the United States, and yet doing deals in dollars. So if Malaysia, right, or let's say Singapore, if Singapore sells oil, or how about this? Businessmen get together, and ladies, businesswomen get together in Singapore, and it's a seller of oil meeting with Japan. And they're like, we have some oil. So it doesn't really matter where the oil comes from, but the meeting is in Singapore, and they negotiate a deal. Okay, with Japan is going to buy, $30 billion worth of energy from these energy sellers. And they do the deal. The contract is all written up. The lawyers are all there, right? And it's signed, but in terms of dollars, literally 30 billion in dollars, right? Exchanged for that, whatever 30 billion will buy of oil, right? And here's the interesting thing. The sellers of the energy are not likely to be American, yet the deal is done in dollars. Okay. And the reason for it is many people are trying to hedge currency risk. So if Malaysia is selling oil to Japan, right, the Malaysian currency can change a lot. The Japanese currency can change a lot. Other currencies can change a lot. Plus the price of oil is going up and down. So very often what they do is whatever their local currency is getting in dollars and whatever oil is getting in dollars, they can just peg to the dollar. I don't mean the country, but I mean their currency risk. They can do everything in dollar, right? So now they can hedge the dollar and get whatever local currency exchange on the dollar. So now they're trading oil for dollars with Japan, and then they can just have a mechanism that just can hedge against the exchange rate in dollars. Now, if you had to do it like the local currency might have more volatility than the US dollar, so people just end up using the dollar. Okay. And that's why it's a reserve currency, because all these deals get done in dollar, and therefore the Malaysian central bank's will have a lot of dollars in their vaults. Turkey doesn't have any foreign currency, but Malaysia's central bank would. And so there's dollars in those vaults, and anyway, so it's easy to hedge and all that. So essentially, they're pegging the local currency to the dollar and then trading the oil for the dollar and then exchanging it out. Okay. And my point here, though, because Daniel's like, well, what about the 6 trillion per day? The United States is not even involved in that transaction. It's not even American oil. But they're using the reserve currency as a basis. Okay? And it's really, you'll see it's advantageous for the world to have either one or two reserve currencies so that they can price everything in one thing. So in my fundamentals course, one of the things we talk about in probably lecture 2 is if we were in a barter system, you get into a challenge where you say, okay, you build tables, but you need to buy wood from somebody. You're going to need hammers and nails, okay, to make the product your table. So now you go to the nail guy. You're like, well, I need some nails. And they're like, well, what do you got? And you're like, well, I can build you a table. And you can have it after I get the nails and after I get some wood. And he's like, you don't have any wood yet? No. So if I give you nails, you still can't give me a table? No. But in the future, I'll give you a table. You're like, okay. And then here's the problem. How many nails do you get for a table? You might get 10 times the nails you actually need. And you're like, I don't actually need that many nails, but it'd be a fair trade if you gave me 1,000,000 nails for one table, because these are nice tables. And then you got to go get the wood, and then, now you're bartering for your future tables for the current wood. And, once again, it's not an easy trade, right? And then now you're making tables and you pay off your debts to these guys because you got enough wood and you got enough nails, but now you need some bread, you need rent, right? And you're like, well, tables for bread, it gets really confusing, right? It's so much better just price everything in a currency. But now imagine if you had to have a price for every currency that's updated in real time. Okay, the price of oil in dollar, price of oil in euro, price of oil in pound, price of oil in gold, price of gold, euro in yen, and price. And all of a sudden, you got all these different prices, and all the value of each currency now is changing in real time. And so when Malaysia is getting together with Japan, and Japan's like, well, we want to buy so many yen, a trillion yen worth of oil, and then Malaysia says, well, in our currency this will be such and such a price, and now both parties have to get together and say, was that a good deal, is that a bad deal, how much oil am I actually going to get? You see, all of a sudden they're like, how much, what's going on? Where you could just say, well, there's a global price, dollar, and now Japan has to figure out their currency, how much oil they'll get. And then Malaysia, the seller, will say, well, we're going to get this many dollars. Is that good for us in our local currency? But both parties know that they're talking about a dollar. Okay? So now, if going back to the other example, the person that needs to build some tables can just say, well, I got some dollars, so I'm going to buy just enough nails. I got some dollars, I'm going to buy just enough wood. I'm going to make a table, and I'm going to sell it for more dollars. I'll have enough nails still. I'll buy a little more wood, and I'll sell another table for dollars. So now you're out of tables again, but you have a lot of dollars, and now you go spend just the perfect amount of dollars to buy some bread. You have the perfect amount of dollars to pay your rent. You have your perfect, right? And all of a sudden, wow, this is so much better than saying, what are you going to do with the excess nails you don't need? Now you got to go out and say, well, I got these nails. Can I trade the nails for bread? It's very inefficient, right? And the bread guy's like, well, I don't really need nails. I'm not a carpenter, right? Right? So anyways, so imagine all these deals around the world that have nothing to do with the United States, yet they're priced in dollars. And that's what makes it the reserve currency, because now every central bank around the world is keeping dollars in reserve to essentially, have the function or ability to allow these deals to happen. Okay. That's why exporters have lots of cash in their vaults, in their central bank vaults, because the exporters exported a product and then got cash in return. But they got foreign cash, essentially. So now you go over to the central bank, you're like, give me the local currency, here's some foreign currency. Okay? This is why Turkey doesn't have enough foreign currency. They don't do enough business globally. It's a giant red flag. Because now Turkey has to pay for loans in foreign currencies. They go to the vault, and the vault, all they have is lira. Okay? If they were exporting, they would have a ton of foreign currency, and then the central bank would just pay off the loan in euro. They'd have tons of euro. They're like, we export a whole bunch of stuff to Europe. We have tons of euro. So we can pay back our loans, and it's no big deal. No big deal whatsoever. But having big debt when you have no money is a big deal. All right. So let's roll. Let's take a look around. I see, yeah. All right. Piggy. Okay. Beautiful little swing trade opportunity here at, 38.50. So if you're a bull, you would still buy the dip, yo. Up, down, up, down, up, down, up, down. I don't know if you're a bull, and I'm not telling you to be a bull. This is an obvious bearish entry. The second bearish entry is here. Okay. Very cool. So if you're a bull, get ready. You love this. Maybe you missed this. Okay. So the decision-making process is pretty easy. I wish you had made the decision last week, but if you haven't, let's go through it. You think it's going here if you're a bull. You think it's going here if you're a bear. Okay? Sangam says, sir, your MIT cryptocurrency course is free if I watch the old lecture. Yeah, but and you're like, it's $2,600 for the latest one. Yeah, that's right. Okay, yeah. I am going to pay almost $3,000 to take a course at MIT. That's true. I could get it for free. Yeah. Yep. Oh, thank you, Mark. Yeah, that's part of the fundamentals course, which I'm going to redo this summer, by the way, and specifically talk about monetary policy. Okay, I'm going to rename it because there's more to it than just fundamentals, right? It's more specifically monetary policy and central banking. So I'm going to update that and do it this summer, along with doing the official launch of the macroeconomics course. Okay. Anyway, so if you're a bull, you're looking at it this way, and this is what you're thinking for the week. That's it. If you're a bull, couldn't be easier. Couldn't be easier. Oh, is my volume low? Is that right? Huh, is that right? It's it's telling me it's actually quite loud. Let me know. Yeah. Meta says it's low. Hmm. Okay. If you are a bear, you're going to look at it this way, and your 3A2 predicts a 1618, so it's right in target. So Morena says it's very low, and other people are like, no, it's either loud or perfect or fine. No, Gregory. But I'm going to do like summer school. So if you want to attend it live and have your questions answered and get, some one on some time, yeah, there'll be a fee. Right? So typically what I do when I deliver a lecture for the first time, I stop the recording and take sometimes 20 to 30 minutes of Q&A. Oh, is that right? So if I'm here, it drops a lot. Well, yeah, I suppose it's supposed to be that way. Well, let me adjust. See, here's the thing. If I make it louder, then it's too loud. I mean, it shouldn't be quiet. I mean, that's the thing. Yeah. Yeah, but if I'm over here, yeah. So maybe, yeah. So maybe it's just noise canceling. All right. So hopefully it's not too bad. If it's bad, I'll try to do something. I guess remove the noise canceling. All right. So we already did kind of kitty cat, right? We did this one. Well, let's do it again. Okay. Friday. All right. Sunday/Monday morning. Okay. Money role reversal. Any thoughts? Any questions? Okay. Right now, you should be setting up this trade in here, what we call role reversal. Yeah, well, I'm not sure where to speak. If I speak here versus if I speak here. I guess I can do that. Maybe I'll twist this. And I'll speak more in this part of the mic. We'll see if that helps. Okay, so anyways, okay, pretty good entry, I think. Pretty reasonable. And this should create the next move down. When would you move to -3? I already did. Okay, I already did, as you can see. That is my stop loss. That's my entry, and that's my stop. No, thank you, Meta. Thank you. Okay. So I can measure it up like that and say, well, we're doing all right. Okay. Awesome. Thank you, Marina. So I hope you like the entry. I hope it makes sense. I don't have a lot of conviction for it at the moment, but it's just another trade, right? That's all. So obviously, we got this is obvious role reversal, and I'd prefer to see this one hold as well. Otherwise, it's likely to come up and knock me out of break even, right? Because in that case, if it came back up, it'd be a potential for a reversal, right? So you'd get kind of knock me out here, come back down, and then it'd go this way. And that's much different market conditions, right? And that's why you'd want to get knocked out, because you're like, well, the conditions changed. The reason for it is this is actually the right side of a double bottom. So this could be like a fake out, and then it can come all the way back. And I don't want to. I don't want to be exposed to that, right? So my trade plan is breakout and trend down. Cool. So if we're back up here, that sets up a potential to head all the way back up there, and now it's a substantial loss versus a break even. So if market conditions change and my trade plan is vulnerable, I get out. That's the whole idea, right? Taking a look at our friend the Aussie, right? Aussie. What do we have? Let maybe look at it on a 15, maybe. Okay. Coolio. So the market opened here. Okay. And what is the trade plan? Well, the trade plan we created in the swing trading group is this. Okay. We said somewhere between this price and this price, we want to be long on Aussie dollar, and our target is up here. Okay. Just to adjust, because I had to adjust it because the pivots were actually compressed. So you have to think about it. My entry was actually the exact central pivot that we had last Thursday. So this trade I took on, let's say Monday, we planned on Thursday. So if you don't know what you're doing on Friday for Monday, like I can't even imagine actually that people show up on Monday and they're looking for a trade. I'm like, dude, you already missed it. What are you talking about? We planned that days ago. Okay. So anyways, zippity doo-dah, zippity a. So if I adjust, this is the conservative target. I think we can afford to go for a more aggressive target. But here's the other thing. Okay. And this is what kind of blows people's mind usually. You see all this, the standard operating procedure for this trade is this, right? You see all this analysis up here? It's dead to me. It's dead. What do I care about? If that's dead, okay. Daniel says, what assets for my 300-year plan? Well, think about the story. The story goes like this, right? I was in London the day that some old dude died, the Duke of something, and he left his family fortune to his son, who was like 19 years old, And he was like the richest 19-year-old in England or something. He'd inherited tens of billions of dollars. And so I'm like, well, I wonder how that family made money, right? Turns out their great grandfather bought a bunch of worthless land not far from the Thames, a bunch of swampy, worthless land, which we now call Mayfair. And they just bought it up and they never sold. So 300 years later, they're one of the richest families in England. And the way they got filthy, stinking rich, more money than the Queen. How did they get more money than Queen? They bought swampland. What did the royal family had to do all these years? Oh, they had to go to war with England or with France, and they had to go to the war against the Spanish. They had to go to war. They had to go to war. They had to go to war. Meanwhile, a family richer than the Queen bought swampland and did nothing. Okay, so what do? Buy land, buy assets. I guess it wouldn't matter. Can I research them? Yeah. Go ahead. So anyways, here we are. I'm more interested in May. So this is actually a late trade because here's the other trade we planned out 2 weeks ago. That's the real trade. Okay. So I think we could still get here by the end of the month. And I know we don't have a lot of days left. But that would be killer because then it would move the central pivot point up toward here. Wouldn't that be sweet? And then it'll move this up here because you might remember we were targeting 80. Okay. So back down in here when we were planning this trade out, do you guys remember this? Our plan was to buy at 75 and trade it up to 80. I'm long at 76 because I'm conservative. So I allowed for this to occur. And then this happened. And now this is going to happen. And then probably one more. Okay. Well, yeah. Well, how are they called? What you mean what their name is? I have no idea. Google it. Rich English boy inherits billions of pounds. Google it. What it made me think, though, is so let's go back to this idea of specialization, right? I talk about it in the macroeconomics course. A society can decide to either make, they can make bicycles, right? Or they can make motorcycles. Okay. Now, there's only, right? You have human capital and you have physical capital, right? Okay. You have machines and you have people and the natural resources required, right? So you have your inputs. How much steel, right? So you're going to need iron ore and you're going to need coal. You're probably going to need rubber and all this kind of stuff, but both bikes and motorcycles, right? But here's the thing. You can make 100%. Oops, I guess I shouldn't do it this way. Let's delete that. You can, let's do it this way. You can make 100% bikes. You can do 50-50 bikes and motorcycles, right? Or you can make 100% motorcycles. Or some combination in between. 1/3 bikes, 2/3 motorcycles, 1/3 motorcycles, 2 bikes. And you make a decision, but you'll always get a number. like the maximum efficiency, right? Somewhere on this curve, because it costs more to make a motorcycle than a bike. So now you have to do things like, well, one motorcycle costs 20 bicycles, for example. So you're going to be somewhere on this curve, right? And then specialization with trade can actually get you to a point where one motorcycle might only cost you 15 bicycles. And now you have improvement. You could never get that kind of return on your own, but through trade, right? So anyway, so I was thinking about this family, how they specialized just buying real estate. And of course, what you do is borrow against your real estate and buy more real estate. And then once that's gone up in value, you borrow against that and you buy more real estate. So every generation, let's say this kid is 19, and maybe now he goes to Oxford and receives an education, right? He's 19 years old, goes to Oxford, receives an education on managing business, understanding the finance of capital and capital flows, right? And essentially becomes an expert in managing and adding to the family's portfolio of real estate. And all of a sudden you're like, dude, for hundreds of years, the men of this family, most likely, were becoming specialists in real estate and finance to manage and grow their portfolio. Meanwhile, they don't have a real job, right? They own so much real estate, they make $30 million a month profit doing nothing but owning the real estate, right? So you're like, wow, dude, these guys are making money hand over fist doing nothing. Yeah, but they specialize in it. And you're like, wow, that's actually pretty cool. Now think about maybe your family. You know, everyone does these random jobs, right? Right? It's not like your great-great-grandfather was a welder, and then your great-grandfather was a welder, and then your grandfather was a welder, and your father was a welder, and now you're a welder, and you're going to have your children become welders. And by the way, your last name is McWelder, right? Okay. I bet you that's not the case, though, right? But in this case, this family, that's the one thing they do, and they do well. Now, think about this. At some point, though, there was a great-great-great-great-grandfather that probably didn't know anything about real estate, didn't know anything about finance, but for some reason bought this land for cheap. And then maybe at the end of, most likely it's a male, right? So at the end of his life, well, I guess if it's a great-great-grandfather, probably male. He, his. Learned throughout the life of owning this, like, oh my God, this land is now worth more than I've earned in my entire life, exchanging my brawn for money. And you're like, wow, I'm going to die, but I can give this to my children. But I also want to give them one piece more, the sum of my life. Brawn is good, honest work, but brain is just easier and maybe even worth more. So probably told their kids, look, in the last 10 years of my life, I've made more money with owning this land than I did with the rest of my life. And it was a hard, toiling, nasty, difficult, challenging life. So I'm going to give you this land, but please don't sell it at any cost for any price. Because in 10 or 20 years after you sell it, it will be worth double than what you sold it for. And now someone else is rich. Just whatever you do, never, ever, ever sell this. And in fact, if you can develop this land, I want you to get some knowledge and learn how and get right and develop this land or put a property on it or something and never sell that. And then your children will be better off. Send them to university because now you'll have some money. Get them an education. Get them a proper education. Okay? And all of a sudden, so now we're into the third generation. So that's a 100-year process. So imagine a 300-year process where you go from poor living in the swamps of London. I mean, come on, right? Fast forward to 300 years and you have more money than the queen. And you're like, wait, there's a lady queen? There's a lady running the royal family? You're like, that's unheard of, right? So you're like, but anyways, look how much time has gone by, but your family has gone from swamp dwellers living in the mud and swamp next to the filthy, stinking Thames River of the time. It would have been horrible. 300 years later, you have more money than the queen. More money than the royal family. More money than the king. Are you on that kind of path? Are you thinking that far ahead? It's unmanageable, right? You can't imagine living a modest existence to suddenly being more wealthy than the king or queen. Yeah, well, it only takes 300 years. What's the big deal? The big deal is nobody thinks that far ahead, and therefore they don't do it. What they would rather do is buy a big TV. Okay? That's what they would rather do. They'd rather buy some comfort today and give up the future. Oh, well, living in the swamp is so difficult. At the end of the day, I want to get drunk in front of the TV. And 300 years later, your great-great-great-great-great-great-great-grandchild lives in a swamp. It's a miserable existence, but they have a beautiful high-resolution television and cheap beer. Right? All right, cool. So let's go out here, going through a pullback. Cool. I'm going to look here. This is going to be interesting. This is going to be interesting. Okay. So it looks like this trade I did on Thursday, right before the swing trading group, was up about 120 pips. Cool. Kill. Awesome. Cool. So hopefully I can survive this one. That's what the 21 EMA is all about. Okay. So I'll look at it more like this. You know, we should probably do it this way. Let's use Leonardo Fibonacci. Let's see what Uncle Leo would have us do in this move. And then you would rotate this around. Lovely. Right, there we go. What do you think of that? Ugly. With your smile so worn and your teeth so green. All right. What do you stink? We can highlight the midpoint psych level. That's around a 50. 50, can't you see? So what I would like if I were me is a pullback, hit our sweet spot, and then up. Our target then is 1382, which is 2 standard deviations from the current mean, and that gets us about $121.60. Let's call it $121.50, and that means this could actually kind of tickle the 618 and then head up. Cool. Yeah, Cave, maybe. Well, I mean, if you understand, here's the thing. If you understand, it's the first step. So when you're in your 20s, you start saving money for a retirement. Let's say a certain percentage, 10%. Okay? 10%. Pathetically small amount. But it's difficult because your bills add up, right? Well, stay poor longer. Make sure your bills don't go up before you move to a more expensive neighborhood or a bigger apartment or whatnot. You have to have a budget. So before you do anything, pay yourself in the future. So take your money minus your taxes. You don't negotiate with the government, right? So you pay them 30% always. Why don't you pay yourself always too? You're like, well, right? If you take 10% of your income, you're like, but that leaves me with nothing. I know. What are you going to do? Buy a TV? Okay. So budget. Live on less. You're 20 for crying out loud. You can do it. You don't need much. Okay. But 10% of your income over 40 years, you'll retire a millionaire. It's almost guaranteed. Okay. Cool. That's it. Now, really, you should be saving 20%, maybe 30%. Plus, you should have a career. So that means you need a college degree, but you should have a career so that you get a retirement account and the company pays you money. On top of that, they match. Okay. Or even better, you run a successful small business, but most people can't do that. So you could go to college. Instead of having a job, you have a career, and you max out everything. They're like, we have a 401k retirement plan, and we also have a matching policy. Good. I want maximum everything. That's what you need to say. Because then after your taxes and after your investments into your retirement account, like literally max it. If you can do 40%, do 40%. So at the end of the day, you're like, well, dude, I have to live on $300 a week. That's after I've paid my taxes and invested in the retirement account. That's all the money I have left. Yeah, that's right. You can't afford a big TV. All that's going to go to whatever. Okay? But I'm telling you, by the time you're 65 and a half, you will be a millionaire. Okay? And then you could probably, along the way, since you know how to save and invest, you'll probably save and invest for your kids to go to college and all that kind of stuff. And now you've changed your life, and you've also changed your children's life, and now they'll be educated and they'll think forward, and so they'll teach their children. So now you've just changed the entire lineage of your family. Okay? Okay? So, yeah, it might be worth it. So, going back to this USD, yup. Okay. Yeah, that's fine. Euro USD. This is what I'm thinking so far. Cool. So we did Euro dollar. We did Aussie dollar. We did USD CAD, all of which I got positive trades on. Okay, the next one will have to be Kiwi, but it was the weakest. And pound, I've tried multiple times and got knocked out of it, so I'm just not in it. I didn't lose any money. Well, I think about 3 or 4 pips per trade. So I lost 12 pips, let's say. But I'm giving it a break. What should we do now? I guess we should do some exotics. Here's my rand. Okay. I'm stuck here. Okay. I'm stuck here going nowhere fast. I got to stop up here, 30 pips or something. Sell zone is here. Second sell zone is there. This is the primary. This is the secondary. Not loving it, not hating it, not loving it, not hating it, not loving it, not hating it. So I don't know where it's going to be. The other thing to acknowledge it is this is a giant bottom, not just because of the market, but because of price. So, I'm neutral on it. So I got out of this trade, by the way, just, to understand this kind of process. I exited this candle and I took 500 pips profit. Okay. Of course, it's not really pips. I took $500 profit on a $100 investment. Okay. So I made, I invested $100 into a mini lot and I got out with $500 profit. So I got a 5X on it, which is even better than 4X. So I'm out here. So I let it find its top and then, let it kind of work its way around. And long term, I feel fine. Short term doesn't have to. Okay. Okay. So I'm sort of like, meh. So I might be in this long. I might get out in 2 hours. I don't know. Right. I might be out. I might be short this for weeks. I might be out in 2 hours. I don't know. I'm still debating that one. My other trade is way up here with more than 700 pips profit. Cool. Maybe one other thing to say about this. You might like this. Here it is, 715 pips profit. Okay. Now check this out. I've earned 19% return on investment in interest payments. 19% ROI already collected. Okay. Okay. Plus 700% ROI in asset appreciation. Yeah, that's a tough 6 weeks, huh? What do you think? Okay. This is what we call, so if you add it together, 120% internal rate of return. This measures the profit, let's say, per dollar. Not pre-dollar, sorry. Okay, IRR is a per dollar factor. Okay. Okay. So the difference is that one trade. Okay. So we'll say that one trade has earned $700 IR or 700% IRR. Okay. But 2% absolute return, or let's say total. We'll call it total. No, don't. We'll call this total return. Oops. Okay. So the difference is 700% for the money I invested, 2% for my portfolio. Okay. Cool, right? Right. And then I think we'll just leave it here after this one. This is a little peso trade, yet another peso trade. I did this one, I guess it was Thursday. So the swing trading meeting, or maybe I did it earlier than that. Anyways, I did this last week. I know it's a piss poor trade. I get it. I understand. But it's also a May trade. So in the third week of April, I threw down a May front run. So I either make nothing on this. I either lose like 3 pips or I'm going to make a lot more because I'm going to hit the May target, for example, minimum. So I'm taking this down to, let's say, conservative target 19.5, and I'm short at 20. Okay. But I might also then say the distance from this trade to, let's say, 19.5 is this. So then I could say this would be the low and the high would actually be somewhere in here. So I could take this projection then and say, ooh, let's say we hit this target and we have a pullback, and then we can head down here. And now I'm projecting June, and then I can project July. Okay. And so I could say my target for this trade is probably somewhere between 19 and 1850. So now I'm in the third week of April, I'm making a trade that should last 100 days or could last 100 days. So I could take my, 30 pips profit, or I can go for 2,000 pips. That's an exaggeration. How about 1,000? I can take 30 pips profit, or I can go for 1,000. Okay? And what is it that I'm actually trying to like predict here? Let's do it this way. Down, 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 up, up, down, 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 down. Okay? You have to look at it from maybe a weekly point of view and say, okay, well, okay, let's measure from this low to this high. Okay? 618 predicts 1382, and that's essentially what I'm doing here. So 1850. So 1,500 pips. Okay. So my assumption is whatever macroeconomic conditions existed to create this flow down, okay, this move up, by the way, totally predicted this. Okay, look at from January 1st to what? Middle March? Oh my God. That's exactly what we had talked about, even way up here. So anyway, so now what? So if this move continues, yeah, 618 predicts 1382, and that would be, somewhere in there is your target. More or less. And you're like, yeah, cool. Now, here's the other thing. I missed this one. I tried to get it, and I missed this one, and I tried to get it. But instead, I caught those other trades. But we totally, this is a monthly pivot as well as a weekly pivot and all this. And I had entries on these. I used limit orders. It was one of those things where they came up 20 pips short each time. Just never, I was always looking the wrong way, but nonetheless, tradable for sure. But I did catch like the RAND trades and stuff like that. So cool. Isn't that nice? But now you have to think about May and possibly June in April. But you may recall, right? Many of you, especially if you're in my swing trading group, in March, okay, we were talking about April, May, June. And I had people plan trades based on what we assumed for April, right? They had to then project out to May and project out to June. So I am teaching people how to do this. Okay? Depends on what your conviction is. So if you were here and you're profitable here, you're quite happy with the situation. If you're like where I am, this one is quite late. I really wanted to be on this one. I really should be on this one. But like I said, I caught other trades and just wasn't there that moment. And now I'm not I'm in a position, but it's very vulnerable, right? For example, there's no reason why we can't do this first. So I'll catch this one. I don't think it'll do that. I think it'd be more like this maybe, in which case I'll get knocked out at break even and I'll catch this one. I'll try to catch it at 20.5. Cool, right? Cool beans, right? As Kurt Worley used to say. Awesome. Cool. Everybody happy? If you're happy, would you click the like button, please? Only half of you have clicked like. Let me know. Click the like button. Only half of you click like. The stock market is now open. We have a good trading week. There's lots to be thankful for. Your hard work is going to pay off. Especially if you're putting your hard work into your education or into planning or into research. Okay? One of the things we talked a lot about on Friday was that you need to be in the business of value creation. The more you focus on that, the more you're going to have a breakthrough in your trading career. Value creation. Okay? What will the tax increase do to the USD? It's like 0.0, I'm going to guess, 3% of Americans are going to have taxes go up. And they have very smart lawyers and accountants and such, and they'll just move the money. So ultimately, let's talk about this. Will it affect consumption? Not really. Investment? Well, that's the problem that I have with it. What they're taxing is entrepreneurialism and long-term investments. I hate that. I hate it. I hate it a lot. I would have said, keep your $2 trillion. We don't need it. And don't raise our taxes. That's what I would say. So to say we're going to I don't know. We're going to, if you invest your money, we're going to tax you. And in particular, the wealthy ones. Okay, whatever. At least those guys can figure out how to avoid it, but it's just a waste of time. And then what? Government spending. So I guess what they're going to do is reduce investment and increase government spending. All right. And will it impact exports and imports? No, not really. So it ultimately, I don't think it'll have a real effect. But the problem I hate about it is just the idea. I don't even like the idea. One of the things one of the domicile, or let's say jurisdictions that I really like is Hong Kong. Hong Kong says if you have a job and you have right, and this gives you income, you pay an income tax. And I think the most you can pay is 15%, which I think is a good amount. That's about right. I kind of like that. I think it's about 15% on your income, and that gives money to government to provide roads and schools and put criminals in jail. And okay, I love that. You know what I mean? Like, I love that. Okay, I get it, right? Right? A libertarian, I think, would even pay that. Okay? That's about right, let's say. Now, if you take some of your money after you pay the company, the government, okay, so you have some excess capital, so you have your income minus taxes, so your net, we'll call that NOI, your net operating income, and you say, well, I can buy a TV for $1,000, beautiful TV, and it will depreciate until it's worth zero. Or you could take $1,000 and invest it. So now, again, what we're talking about, let me make this a little bigger. We're talking about GDP is equal to C plus I plus G. Okay, let's just isolate this. It's a closed economy. Okay, so you're like, well, I could put the $1,000 under C, or I can put the $1,000 under I. Which one's better for all of society? Which one is better for all of society? Investment, because it'll have future returns. This will depreciate to zero, right? So consumption comes and consumption goes. Investment will grow. It increases productivity. Okay? So here's the cool thing about Hong Kong. They come around and they say, well, you can buy a TV with it. That's great. Consumption goes up. GDP goes up for a quarter. Okay? And whatever. And then just washes out. Investment, let's say you either buy the stock market or let's say you buy an apartment in Hong Kong. 10 years goes by and it's 2,000. Of course, this could be 2 million or whatever, right? Okay? This is cool, right? Well, in Hong Kong, you get to keep the full 1,000. Okay? In the United States, they're going to want to take 40 to 50%. So they taxed you on your income, then you took leftover income, you made it productive, it got a return, and now the government wants to come back and tax you again. You're like, well, screw you. I worked hard for my money, then I paid you guys off, and then I deferred my short-term pleasure and instead invested and created productivity in the economy. I should be able to keep the $1,000 because it hasn't changed anything on the original here. This was because I took risk and because I deferred my short-term pleasure. Why should you get 40% because I did something good? Why should I have to pay you again? And Biden's like, well, not only should you pay me, if you're already rich, you should pay more. You're like, pay more? Well, what if you just took more risk or held it for longer periods? Right? Well, you should still pay more. It's not fair. You're so rich. You're like, well, I'm so rich because I don't own any TVs. Okay? And I turned $1,000 into $1 million because I took risk and I deferred my pleasure. I shouldn't have to pay you more. And they're like, well, what about the poor people? Okay? Well, like I said, when you're 20, put 10 to 20% of your income into tax-free retirement accounts. Invest it. Well, but then I won't have the new PlayStation and I won't have a 4K TV like my daddy. Oh, but then my car, I want a nicer car. I'm 20, but I want a Mercedes. Yeah. Poor. Never get out of it. Guaranteed poverty. You want to be comfortable now. You want to be rich now without taking an investment or risk. Poverty. Okay, it's a poverty trap. You got to break yourself out and say, you know what? I'm going to work hard now. Which a lot of people don't do. You guys do. You know how to work hard. A lot of people don't. You got to work hard now and spend your money on investment, not spend your money on consumption. And you have to just think, well, now, instead of renting an apartment, you buy an apartment. You live in your apartment for 10 years and you sell it for 50% more. You just lived in an apartment for free. Well, poor people spent 10 years renting. Okay? You see the difference? Or now you can borrow against the profitable apartment, or you, at least through amortization, you have equity in, right? You have your 20% down, plus you probably paid down another 10% or more. So you have 20 to 30, you have about 30 to 40% equity in this property. So you borrow against that, rent it out, have someone else pay the mortgage for you, and now you buy yourself your first house. But then you're like, but I don't have any furniture or TVs. Yeah, because you're going to be filthy, stinking rich. Okay? Okay, you see that? 10 years goes by, your house is worth 50% more. Okay? Your apartment's worth 50% more. Plus some dude has paid down your mortgage all these years, years after years after years after years. He's paying down your mortgage for you. So now you own 100%, or let's say 80% of your apartment, and your house is going up in value, your apartment's going up in value, and on paper you're probably getting pretty close to your seven-figure targets. Okay? Okay? Now here's the thing. You're working hard in your career, you're saving income and turning savings into investment. If you don't know this, by the way, everyone that's gone through macroeconomics knows that savings is equal to investment. Because if you just save it in your account, then the banks are going to invest it on your behalf. You'll get a higher return if you're able to invest it yourself. Either way, savings will turn into investment. Consumption leads to nothing. Okay? Okay? So the cool thing is your apartment gives you an income stream and asset appreciation. Your house, well, right? Your house is going up in value, but you're not doing anything. Now you're maintaining it. Okay? It's cool, right? You want to own assets. And then when you're too old to work, you don't have to work anymore. You get money for nothing. Right? You have money for nothing. Cool. Nice. 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 My name is Wayne McDonald, and I approve this message. Peace on earth. May the pips be with you. May our profits be above average. I'll see you tomorrow. Thank you for the thumbs up. Thank you for leaving comments. Thank you for being a client of TradersWay.com. Thank you for being a member of the Forex.today YouTube community, 18,000 foreign exchange traders. Thank you for being a student at FXBootcamp.com or part of my live trading groups, either the swing trading group or the portfolio manager group. Thank you for being part of that.